All right. Well, good morning, everybody. Today is March the 14th, Tuesday, 2017. And the time now is about 54 minutes into the trading day. So instead of a pre-market pulse scan, this is going to basically be a opening bell pulse scan. A lot going on. The biggest thing of note is that the PPI that came out this morning showed some in wholesale price inflation, which is very interesting. All right. So, with that being said, you would expect that gold would catch a bid here anytime they talk about inflation, right? Nope. Gold is still under pressure. We got up to 1206.80, but we also got down to 1200.10. Right there testing that 1200. Now we are bounced back to 1202.80. But the Dow is now down 38 points and the NASDAQ is down 18. Now, let's put this into perspective. We've been in a super bull market in stocks, right? And it's funny how the Dow being down 39 points, NASDAQ being down 19 points, all of a sudden looks like something super significant when it's really not. All right. There's still nothing bearish going on here when you look at the daily chart of the NASDAQ 100 and the weekly chart of the NASDAQ 100. There's nothing bearish going on. Every down day that we've had in the NASDAQ sets up for the subsequent rally to new highs. This really being no different. Now, on the intraday chart, yes, we have pulled back from yesterday's close. All right, you see that right now the Qs are down 51 cents. Okay, not $51, not $5, but 51 cents. So you would say big whoop, right? So watching this one. Now, today's stop loss in the NASDAQ 100 as indicated on your sheet is going to be the hard stop for the day. So once that stop loss is reached, then I will pull the trade. I will be out of that trade. All right. Um, I know you guys see what's going on in the energy space. Crude oil is down over a buck 10 now at 40, trading at 47.30. Um, I said 44. It looks like that's where it wants to go. That's in play, and that seems to be what is happening. So we're watching it to see what happens. Another thing of note is the XIV now is down almost a buck. It rallied up to that 70.22 level, right? So we had uh, a head fake continuation rally. We kind of spiked it, all right, from yesterday's high, and then now we're starting to totally reverse. All right, so it's pulled back a buck from the high. All right, already from the intraday high, we've already reversed a buck. Now it should be noted that in the beginning, the XIV opened up. It opened higher. While the stock index futures were still negative, the XIV was positive. All right. Now XIV is negative along with the stock market. So it kind of like, you know, it's lagging a little bit today. Another thing that should be noted is the bond situation. Now the futures are off about about 6 ticks, and the TLT is up 42 cents. All right. So that's an interesting thing to watch out too, watching those bonds. Also, looking at the natural gas, it has now dropped back below $3. It's having a problem with $3, like I showed you in yesterday's video. Also, taking a look at the dollar index, it's still having a problem with 102. All right, so we're looking at resistance levels come into play in just about every market here. So the question is going to be, where do we go from here? Well, your GDXJ, which was strong yesterday, is now down 44 cents today. So it's having a problem with 36. JNUG is off a quarter. All right, it's having a problem with $7. So everyone sees that, right? You see that. All right, can't ignore those types of price patterns when they present themselves to you. So yeah, nat gas is dropping, man. Like I said, so these levels, when I point them out to you on the charts and when I show them to you on the pulse wave price triggers, that's what they're there for. They're there for a reason, to show you what's what, to show you where we are in the trend, if one exists, and to what extent what the strength of the trend is, and also to alert you to any kind of possible pullbacks that may be coming, things like that. That's what it's there for. Like I was telling you before, regardless of what's happening with the price action, the price triggers are going to get you on the right side of the trade, and they're designed to move up significantly to lock in profit and trail a position. All right? And it trails it rather aggressively, especially as the trend gathers strength, because trends can turn on a dime. So that's what that is designed to do. It's designed to put you where you need to be, exactly where you need to be, when you need to be there. So with that said, yeah, that's what you're seeing this morning. You're seeing that markets are having some problems at these key resistance areas. So we would do well to heed that and to see where we go from here. Now, it is not time to short anything yet. Yeah, the stock market is pulling back, but there is no short here to be had. All right, it's not time for that. If you were day trading or attempting to do that, I don't know why you would try that, but if you were, you could say, "Oh, look, I could have made a little coinage here." Well, I'm going to tell you what's going to happen. This thing is about to turn on a dime, and it's going to rally on you. Tomorrow we got supposedly some other big economic stuff coming out. So tomorrow's like a big possible catastrophic day. And I'm almost certain that the algorithms are going to speak to it. So I'm kind of keeping my powder dry here and not really putting on any positions right now. I'm just watching to see what actually plays out. So that's what I'm doing. Markets need to get over this data storm that we have, and then I think from there we'll be able to ascertain what the markets need to do after that. Everybody see what I've been saying? You see the quotes here. You see the chart I got up on the NASDAQ. Everybody following with me? You tracking with me? Like I said, it's a whole lot going on, and not that at all on top of that. But we have so-called the Ides of March upon us as of tomorrow. The storm is pretty much a non-factor as far as the snowstorm, just like I knew it would be. It was just all hype, trying to, beef up the economy by having everybody go out and hoard stuff, buy water and eggs, milk, and bread. And it worked. It worked. So that's where we are, guys. It's like sitting on hands right now. Should you get out of your short from X? Good old X. Let's see here. Let's take a look what X is doing. Is it following suit with the stock market today? So far, it looks like it is. All right. If anything, remember, we stop ourselves into the market and we stop ourselves out. So looking at the sheet right now and juxtaposing that with what we see in the market, your conservative stop right now should be at $35.43. However, I would be more aggressive and move my stop to $35.13 in X. Does that answer your question? So you let the market tell you when to get out, but I would move that stop. Awesome, great. All right. Anybody else have something you need to look at? It's all about money management, folks. You gotta manage that profit. Take what you can, give nothing back, and don't allow greed to come in. You gotta trade what you see, and if you got profits, you have to protect it. All right. Now, if anybody is long something, use the stop on the sheet. It's going to help you. What will end up happening is you'll stay in the trade longer when you're in a trend, but the algo will self-adjust to help you lock in the most profit and also trail the position a little bit better. Oh, of course, there's no doubt about that. The comment was that there is reason to believe that the East Coast storm was caused by chemtrails. Yeah, absolutely. They've been spraying like crazy these last couple of weeks. I mean, it's off the chain, man. It's over the top. There's no doubt about that. No doubt about that. But who gives a darn? We can't trade weather futures anyway. That's only for the elite. They won't let us peons trade it. And who cares? I wouldn't want to anyway. There's other goodies to trade. Yeah, looking at oil, man. Looking at oil, you know, you got your digs and your dugs. You got your OIH. You know what I'm saying? And you can see here right now that your Doug is really catching the bid here up a $1.67 at 44.85. So Doug is really doing it this morning. It's breaking out, and you like to see that. As for, and by the way, these are new highs for the Doug. So it's breaking out to new highs, and it's in a locked in bull market. All right, so this would be one to ride if we're going to continue to get this kind of momentum. This will definitely be the one to ride. All right, so anybody else? All right, let me see. I see that question. Give me just a second. Pulling something up here. All right, the question is, what's all this March 15th Rothschild narrative I'm hearing about? I have no idea because I haven't heard anything about it. Are you expecting gold to react tomorrow, or will it be a non-event? I don't know, man. There's a lot of chatter about these economic indicators and them being used as a catalyst for turning points. Remember, people like to find reasons to explain why certain market behavior is transpiring. So it doesn't necessarily, mean anything because price action's already telling you what it's doing or what it wants to do. You know what I mean? It's all about the price. It doesn't matter what happens. It could be the worst news ever and the stock market could rally. See, that's just it. That's why I say you can't just base your decisions off of fundamental data alone. Because the reason being is that we don't know the market's reaction to said data. Just because news is good or news is bad, the thing to gauge, if you could so gauge it, would be What is the market's response going to be to said event? That's all it is at the end of the day. We need to know, how is the market going to respond? And to be honest with you, that's not something that we always know. We just don't. So we'll have to wait and see. You know, it is until it isn't. It's kind of what it is. Yeah, the 1200 is holding up for now. It's holding up for now. We'll see. March 15th Fed dot plots, debt ceiling, and Dutch elections. Yep, there you go. That was the big deal. That's the big one, the debt ceiling. Yes, that is the big deal. Yep, I heard about the Dutch elections. Yep, that's what it is. Okay. All right. When you put the Rothschild thing on, I didn't know what if that meant something else, but yeah. The yeah, that's it. DC, thanks. That's the big deal. So yeah, tomorrow's a big deal. So you can see the market kind of like, quote unquote, selling off ahead of that. Remember what I said. When they want to rally something, they crash it first. When they want to crash something, they rally it first. It's just the course of nature. What do you want to do with that Thanksgiving turkey prior to Thanksgiving? You want to fatten it up, right? That's what you do. That's what you do. What does the bodybuilder do when he wants to build muscle mass? He may lose weight first. Get down to a certain point and then start building that muscle, building that weight, starting adding on pounds and building muscle. He bulks up. You see what I'm saying? So that's how you do it. Okay. All right. So, all right. A comment here says that Sean on the SGT report cited March 15th as a day the Rothschilds have a history of orchestrating financial events. That's interesting. We'll have to see if that plays out. That could be interesting. Hey, beware the odds of March, right? I'll say for the past several Marches, though, we've had nothing happen. That whole sell in May and go away has not worked for years now. If you would have done that, you would not have been able to keep pace with the S&P or even have the hopes of beating the S&P if you did that. So, like I said, there's been huge algorithmic shifts over the past 2 decades. Several huge algo shifts that I've noted already in prior webinars, and I don't see that pattern changing anytime soon. The last algorithmic shift I told you was a couple weeks ago, and it's already starting to play out. We'll have to see where we go from here. We need to see who's going to blink first. And right now, we just don't see that many signs of blinkage anywhere. It seems like everyone is stoic and standing their ground and not budging and not wanting to give in. So, I don't know. Anybody's guess is as good as mine. Look at this XIV. See how we hit that new high today and see how it's turning red and giving up and pulling back, following suit. XIV is like the perfect. If I could just trade, if I can only trade one stock that tracks the overall stock market, it will be the XIV. It does it perfectly. It's showing you what's going on today. It's not that significant. We're still above momentum at 68.53, so it can afford to pull back. It can afford this. That's what it's showing you. It can afford to pull back. You just have to close above 68.53. All right, 68.53. That's all it's showing you. Can the market do that? I think it will. All right. So that's one thing. Looking at the Q, similar situation. On the Q side, you just need to close above 131.09, which is where it is right now. All right. So pulling back below that, of course it can do it. it can spike down huge on an intraday as long as it comes back and maintains its momentum. All right, if it closes below that and we start to see the daily chart look like this, then you know we've topped. All right, the daily chart does not look like this. All right, we're just waffling along here. We're just elongating the uptrend. That's all we're doing. So all this over here, right here, is just noise today. It's just noise. People moving shares around, repositioning themselves, bracing for tomorrow. You don't see anyone panic selling and jumping out of the market ahead of tomorrow. You just don't see that. It's not happening. All right. We have Euro elections the rest of the year. Tomorrow, rate hike and debt ceiling. National debt hit 20 trillion and bubbles popping on Main Street. We'll see. Like I said, I mean, we'll see. You know, I don't know. The VIX is broken in my opinion. I don't even look at the VIX no more. It's broken. It is broken. I like the XIV. I like trading that, but as far as anything else, it's broken, man. It's just my opinion. It's broken. But look at this, man. See, you're pulling back. You hit that 70.22, and now here you are. Boom. And here's the funny thing, though. If you were just looking at this from the intraday price action, you would be like, oh no, what's happening? Yeah, all the 3X ETFs are broken. That's a good point, my man. That's a very good point. Seriously. They really are. Hold on one second. Yeah, so yeah, the three times ETFs, man, they are definitely broken right now. So for the most part, I only like to trade the one time